at the minute, just to protect my business name for when I go fully self-employed, I've set up a limited company, but am a bit confused about all the company's house procedures, etc. I've got it all set up. What I mean is, I'm not trading yet, so do I still have to send off accounts, etc.? What happens if I don't forget to do so? Lost in that question. There's another thing that I do for PTs, right? Okay. Some PTs have got great names, yeah, and you can trade under any name you want. But be careful. What you need to do is check companieshouse.gov.uk to see if that name has been used already. Because if you start trading under that name, and you've been trading for 4 or 5 years, and somebody's already registered that name, they can tell you to change your name. So therefore, all of your marketing has to change, all of your leaflets, all of your paraphernalia has to change. So I suggest that when you're starting out and you've got a name, please look at companieshouse.gov.uk, see if that name is there already. If it isn't there, then go ahead and use that name. Now, if you want to protect that name, just like Rob has done, he's actually registered that company, which I suggest people do. And you hold it as a dormant company. That means it's not going to actually trade in that year or for the foreseeable future. What do you have to do? What kind of paperwork do you have to put? You have to do a thing called an annual return, which tells everybody who the directors, who the shareholders are, who the registered address is, and who the shareholders are. This is your annual return, and that is done on an annual basis. If you miss out this annual return, they will shut your company down. Yeah? So it's important to ensure that you do your annual return every year. It's such a simple document, and you can do it online. The second thing you have to do for Companies House is to do this thing called dormant accounts. Now, the accounts is company is not trading. So basically, you've actually just bought the company just to protect the name, just like Rob's done there. He's actually bought a company to protect his company name, which I suggest everybody does. In the same breath as well, go over and make sure you get the URL as well. The URL and the company name is part of your brand. And once you're building the brand, you must protect it by all means necessary. And you check, and make sure you check out Facebook as well, because there's been a situation where I've seen some of the brands that I'm building for people on Facebook. So all I've done is just written them nice little so all I've done is write them nice. I'm watching Josh, a nice little letter to say, right, can you change the name, because that name's already registered. Because once you've registered the name, nobody else can actually use it. Yeah? So the question is, what if you forget to file your account, right? If you forget to file your dormant accounts, the first month you get it's £100 fine, yeah, £100 fine. Then from month 1 to month 3, if it's still late, it's £375. If you're late over 3 months, it's £750. And then over a year, I think it is £1.5 grand, and it just goes up like that. So you have to ensure that you file your accounts, even though they're dormant accounts. And it's quite simple. The Companies House has made it quite simple for you to do that. Yeah? So once you protect your name, as a sole trader, you can register a company, which I tell people to do to protect their brand. Make sure you do your annual return every year, and make sure you do your dormant account every year. When or if you happen to be trading, you start trading, then you can undormant it. Well, that means it will basically be trading. So then you put in your abbreviated accounts into Companies House. I hope that's all right for you. Sorry about the long drawn out explanation, but some people don't understand that it's, you as a director of the company have your duties and your responsibility under the Companies Act. And under the Companies Act, directors can be fined if they don't put in
things for
accounts,
building.
even if it's dormant accounts or small accounts, £5 grand, they're just hitting you with all these. At the same time, the in the revenue wants to know what's happening. So what you do, you tell the in the revenue right off the bat that this company that you're setting up is going to be dormant. What happens here is once you register the dormant, once you register a company, Company's House automatically tells the in the revenue that who's on the company, and the in the revenue will write to you as a director at your registered address, which is your home, and give you a company tax reference number. Company's been held for protection, or it's going to trade. So you've got that opportunity there to actually tell them. Sorry, that's a bit too much. Yeah? Is that all right? Listen, this subject is dry, but as you can tell, I want to tell you everything. Yeah, I want to tell you everything to make sure it's need to go to anybody to ask them any questions. Now, what is the best way to keep records for my accountant? The best way to keep records for your accountant, I prefer spreadsheets. Accountants prefer like spreadsheets so that they can actually see the income is going in and out.
I'm still hearing.
And what they do is sometimes they do it in months. So from January through to December, weeks in January you've got your income, 4 weeks in February, 4 weeks, and you can just input the income on the each cell, yeah, and you can open up a cell and add income on it as well. So what happens there is you add the income, yeah, as and when it is applied. You then add the expenditure as well, yeah, under the different cells. A spreadsheet, you'll see an example of the spreadsheet when you go to my website, fitnessindustryaccountants.com, look at courses, and then look under downloadable spreadsheets. You'll see a copy of the spreadsheets there, and then you can actually see how it's made up, yeah. Can you still hear me? The screen's frozen. Right, the screen's frozen. Yeah, you can see how it's actually made up. Yeah. I don't know about you, but my screen's frozen. Is yours frozen? The screen. You can still hear me. Yeah. Okay. Yeah, a spreadsheet is good. If you keep a diary is well. Suppose I refresh the page. I'm on the other side now. I'm on the other side. Yeah. A diary is good as well. Yeah, diary is good because you keep an account of all the clients that you're training. You keep information on how much they paid you. You just keep a nice document, and that is another thing to give to your accountant. So he or she can look at that book or diary and then just go through it and add up all the income and add up all the expenditure. What you need to do is ensure that you keep something, keep a notebook, keep paper, keep anything that you record information on, so you can have it at hand if and when the time comes that in the revenue want to ask you or investigate you on any of your tax returns. Yeah. So they'll accept diaries, paper, pen, spreadsheet. They'll accept all those types of bits and pieces if you wish. So spreadsheets are good, diaries are good. You can get some of these books from the post office, WH Smith. They've got like a big book which you can keep information on, just so that you can tell what you've got in from income and what you've actually spent and raised. Is that all right? Something like that. Yeah. Okay, cool. expenses that you're going to be claiming for, you get a receipt. Now, some of these receipts are going to be online, so I suggest you keep a document to say, right, like PayPal, you can download a PayPal sheet, yeah, to see what you've actually spent and or what you've actually got in. But for all intents and purposes, when you buy something at a shop, a store, or you go abroad, you are going to have receipts. So keep every single receipt that you have. Yeah. So receipts. Keep all your bank statements as well. Your bank statements are very, very, very important. Yeah. Because the Inland Revenue will ask you for your bank statements, and they'll go through it if they want to. Yeah. So keep your bank statements in chronological order. Keep all your credit card statements. Keep every single receipt, whether you think it's for business or not, because somewhere you can. Hello, bad connection. Sorry, can you still hear me? Yeah. All right, okay. Just right. Right. Will I get reminders to file my accounts in case I forget throughout the year? Rob, right, let me just tell you this. Here are the dates. Right, I'll tell you about the sole trader and then I'll tell you about the company. Sole traders, these are the dates. 31st of October, if you want the Inland Revenue to file your tax. Now, do you really want the Inland Revenue to file the tax returns? Because they're not going to phone me up and say, yeah, Rob, Josh, we got your records, you forgot to claim this, you forgot to claim that, I want you to reduce your tax over here. They're not going to do that, are they? Their job is to maximise the income that's going to the Treasury. However, you give it to yourself or an accountant to do, the dates are the 31st of January. But that has to be online. Yeah? So by the 31st of October, you can put your tax return in on paper. Yeah? And you send that to the Inland Revenue and they work out your tax. Or you save it up until the 31st of January, and then your accountant does that, and you have to do it online. So those are dates for a sole trader. Now, for a company, that will be based on the day it was born. And the day it was born is the day of incorporation, and it's usually 12 months after that date. Yes, they send out reminders about accounts, yeah? So they'll send out a reminder to say, yep, your accounts are due, and it's due now. Now, accounts are due 9 months after the period ends. So if you've got, after a 12-month period, add 9 months on, and within that period, that's when your accounts, or dormant accounts, are supposed to be in. Add a further day, and that's when your tax is supposed to be paid on that company. So if my end of year was September, for a company, you've got October, November, December, January, February, March, April, May, June, then it's June. June is when, the end of June is when it's my accounts are due, and the 1st of July is when my tax is due for that company. Yeah? So those are the types of stuff that they'll ask you, you'll do. The dates. Again, you've got deadlines for filing your accounts, and you've got deadlines for filing your corporation tax return and your self-assessment tax return. Again, they're hitting people with fines. If you're a day late on your account on your self-assessment, they'll fine you £100. If you're a day late on paying your tax, they'll fine you £100. Yeah. So they want you to file and pay your tax as and when you do it. Let me see. most common mistakes people make. Right, this is from one from Josh. Most common mistake people make their contact business friends. First of all, the common mistake they're not claiming enough. I find that there's people who are not claiming some stuff which they legitimately can claim. By the way, can you all hear me? I don't know if I can get a high or yay. I'm not sure. There's people who they're not claiming enough, and they feel that they can't claim it because there's so much bad information out there nowadays. It's hard to keep up, and people do ask me questions regarding what they can and can't claim, and somebody said this, an accountant said that, some other PT said that. Listen, what I teach and what I tell you is straight from the Chartered Institute of Taxation, which is a high esteemed board. So I'm just giving you as it is. If an expenditure is wholly and exclusively incurred for your trade, whatever the expenditure is, it is a claimable expense. Yeah. Please, there's some people go away on holiday on a business trip and they don't claim that. They can claim that because it was wholly and exclusively done on for the purpose of their business. Yeah. Other mistakes on there is they forget they've got other income. Now that means again tax evasion, because the inner revenue thinks, hold on a second, they're trying to rip us off for additional income which they're supposed to put on the tax return. Make sure that you've covered everything. Your bank's interest on your bank, you might even have 50 pence interest, but again the inner revenue want to show that. They want you to show that on your tax return. So if you've got any savings or investments, make sure you bring that in. Another big mistake which people are making is that some people have second or third properties, and they've not told the inner revenue that they've got them, and they've been renting them out for years. Now, what the inner revenue have done is put out inspectors, and I'm certain what they've done is to inspect the land registry to see who's registered on there, and then match it up to who's submitting tax returns. Because there's a lot of people now being caught out where the inner revenue has written to them and said, well, we believe we found out that you've got properties and not told us. They will come down with you with metal, the heaviest you can do. I've got two examples of that. Both of them were guys that had property for 10 years. One of them, we told the inner revenue, right? So I did 10 years. I know it was more, but I did 10 years tax returns and submitted them, and the inner revenue accepted all of them. The other guy, he didn't tell me that he had properties, and it was the inner revenue that actually phoned me. Now, because it was them who found out that he had properties and didn't tell them, they came down on him heavy. He had 7 properties. He's now got no properties because the inner revenue assessed him and said, right, you owe us this amount of money, and it was a determination which was out of the ballpark. It was a stupid amount of money. He couldn't afford to pay it. So they took over all his properties, all his 7 properties, and they've sold them one by one at market, not even at market value. They're just they've now sold all of his properties, and he's got no rental properties. So be careful. So these are little mistakes which the inner revenue will jump on, because once you make a mistake on your tax return, they can open up an inquiry going back 7 to 20 years if they wish. It depends on how what the error is, and it depends how vast the error. If you're trying to reduce your tax and you forgot to put in a couple of grand again, this is another error on your return, and it's inaccurate, and they'll try and prove that it was a deliberate error, or if it was not a deliberate error, they'll force it down another route, and then you have to pay charges and surcharges and interest on it. So once you're putting your tax return together, be careful to make sure you include everything. Make sure there's stuff there where if there's of a personal business nature, no claim 100% of that. Because once you claim 100% of an expenditure which has got an element of personal and business, you have now given the Inland Revenue power to actually disallow all of it. So what I do say is this: if there's like a mobile phone, because you've got personal expenditure on it as well, don't claim 100% of it. Claim 90% at least. Yeah, 90%. I claim 90% of my phone for business. If you use a car for business, if you're not using it 100%, do not claim 100% of all the costs. Claim 90%. Because this shows the Inland Revenue that you understand that there's a personal element to that expenditure. Yeah? So ensure that anything that you could use as a personal as well as business, you do not claim 100% of it. Yeah? And you know those types of things. Stuff like laptops, broadband, licenses for your TV if you need TV to use work, stuff like that. Just claim 90% instead of 100, so that they don't disallow all the whole cost. There's lots of little things like that which we could go through, but obviously with time permitted, I want to get through as many questions as possible. So what else we got there? Any more questions there? Those are common mistakes. Let me move down again. Josh, Rob, one for Josh. Could you ask Tom to check out my website and see if there are any suggestions for improvement? Right. Joshua said, Josh, sorry. Josh has disabled his camera to show the beautiful and equivalent. Are you still? Again, I can't see anybody. I can't hear anybody. I don't know if you can see me here. Don't know. But I hope that's, I hope everything's on. Somebody's coming on. he just come online. Right, tax for dormant. Right, Rob. Tax for dormant. If a company's dormant, there's no tax. Yeah, because it's a dormant company, there's no trading. So basically, there's no tax on that company. You're being taxed as a sole trader. Yeah, you're holding that company as really just to protect it, so that nobody else can actually use it. What I've done for Fit Pros, I say Fit Pros, but PTs, whatever. If they've got a great brand and I think it's great, I say, listen, register it as a limited company so that nobody can use that name, and then so therefore nobody can use that name. Yeah? If you've got a company, for instance, if you've been running a company for 5-6 years as a sole trader, and I say, whoa, that's a great company. So just so, for instance, Rob Fitness, you've been using it for 5-6 years, Rob Fitness, and I go to company's house and see that Rob Fitness is not registered. I can go to company's house, register it as a company, then come to you and say, yeah, can you change your name, please? Because there's a conflict of interest, because we're both fitness and, blah, blah, blah. Please change your name. Okay? So it's as easy as that. So if you've got something that you want to protect, make sure you register it at the company's house just to protect it. I'm not selling this thing here. I want to give you as much information as possible. But this comes up time and time again. I mean, you've got recipes, you've got recipes you've written, you've got books and articles that you've written. Now, copyright covers all of this stuff. And to protect you and your brand, what I've done is written like a quick ebook to tell you all the things you should do, step-by-step guide on how to protect your brand. Copyright, trademark, design rights, all that stuff. you find that it is on my website again. I think it's on the tips, news, tips on tax, and then you'll see protect your fitness brand. That 37 quid is very useful for you. Read it, because I've put some stuff on there which at the end of profiting from your life, from a license and stuff like that, which I've used and I'm using at this very moment with somebody's business. That's all right. Okay. So no tax for a business. Difference between a sole trader. What's the difference between a sole trader and limited company? Right. Again, what I've done, I've written an article which covered. This actually came up in PT United. This question, and other accountants just gave a 3-4 line answer, blah blah blah. But I decided to sit down and dissect that question and do a great article for it, so that whoever reads it can say, right, okay, right, I'll do the sole trader first, and then do the limited company stuff. Yeah. So, what's the main differences? Taxes. Taxes is a big one. I'll look at taxes. Sole trader, you get taxed 20% up to 30 odd grand. Then you get taxed 40%, and then 45%. And so at 32,010, you're now taxed at 40%. As a company, you get taxed 20% all the way up to £300,000. So you can make a profit of £300,000 and pay 20% on it. Yeah? As a company. As a sole trader, as soon as your profit is 30 odd grand, 40%. Yeah? So I look at tax rates, and that means you're giving your money to the inland revenue. Why do you want to do that? Yeah? You've worked hard, you want to maintain most of it yourself. So you organise your tax affairs in a way to extract the most profit out of it. I'll tell you how to do that. Yeah, a company is the way to go. Yeah, if you're looking at maximising your income, and I won't say minimising your tax, because once you start earning 50, 80, 90, 100 grand, you'll be grudged to pay out all that tax to somebody you don't know. So you put it in a company and then let the company pay for you. It will be paid for your accommodation. I used to let the company pay for my suit, and then, but it's a benefit in kind. So you pay a little bit of tax as a benefit in kind, but the company pays for your suits. So you could have a grand suit, £1,000 worth of suits, and you're paying £100 for it for over the year. Yeah, so it's stuff like that. There's much more you can do with a company than you can do with as a sole trader. That's what I'm saying. So out of the two, I will go for the limited company all the time. I mean, you could actually, even if you're just earning 15, 20 grand or whatever for your first year, you could register as a sole trader and pay 20%. Yeah? So please go on the site. Again, it's under news, tips on tax, an article on sole trader and limited company. It's a few minutes read, and it's very insightful. And if you've got any other questions on top of that, then let me know. Right. 5-minute warning. Sorry, I could talk. Yeah, I could talk. Sorry about that 5-minute warning. Any pros and cons apart from this? Rob, my man, you asked some great questions there. It says, any pros and cons apart from the tax rates? If we're still talking about, what are the pros? Companies. There's lots you can do to a company that you can't do for a sole trader. I.e., you can lend money to it, you can borrow from it, and you can charge it interest. Everything's done at arm's length. Yeah, everything's at arm's length. Your company could pay for the services of a PT and get it deducted. It can pay for an A and get it deducted. So you can then bring the family members in as shareholders. Remember, shareholders, you get a dividend. Share out the profits at the year end after you've paid your 20% tax. more you can flexibility within a company than there is for a sole trader. I'm struggling with the 10k. If you're just starting out, you said you're just starting out. 10k is good. Yeah, 10k is just your personal allowance. So I don't expect you to be paying any tax in the first 2-3 years. Yeah, with that amount of thing. Yeah. I'll take one more question. The thing is, I've got a few people. There's David on the line. There's Lou on the line. There's Matthew Oakley on the line. Hey, South London boys. Hey, there's Neil A on the line. There's Rob from Blackpool. And there's Tom. Matthew. I'm a South Londoner. I now live in Nottingham now, between Nottingham and Newark. But I used to go to I used to teach at Wimbledon swimming baths. My brother's in Collingswood. So, you know, I know more. Any more questions for questions? If you haven't got any questions, listen. Nivea is the cream of choice. And when you're going into the gym, baby oil, Johnson's baby oil. You squeeze your press ups, do your press ups, and you just pour it all over, and it's got like, they're still there. Come in the camera. Yeah. Anyway, right. What's this one? Like, when should I transfer from a health club to go for? Right. Here's a question from Rob. When to go self-employed? When should I transfer from a health club to go for? Right. I'd say this. When you're in a health club, you're restricted, aren't you? You're restricted to what you can do, what you can say. Yeah. Because it's their clients, really. So what you do is build up your own clients on the side. Yeah. One at a time. Build up your clients one at a time. Once you build your clients one at a time, when to go self-employed? You can go self-employed any time you want to. Yeah. And transfer from a health, you can be self-employed right now, even though you're in a health club. Yeah. You set up, you put all your costs in there, and so there's more expenditure than income at the moment. So you'll be getting like a refund on your tax that you paid at the gym. So you could do it now. Yeah. There's no set time to be self-employed, because you could be employed and self-employed. You can be employed and self-employed and be a director of a company. You can be employed, self-employed, be a director of a company and a member of a partnership. So you could be all of those all at one time. Yeah. So there's no restrictions. However, what you do is have to put it on a tax return. To tell the inner revenue that yes, I was employed this year. At the same time, I had a sole trader business, and at the same time, I was a member of a partnership. So there's no time like the present, that they say. Yeah. So that was the last question. Josh, is that not right, guys? Right. I can't hear you. Sorry, I can't hear you at all.
Can you hear me now?
Yes. Loud and clear. I wonder what it is. I bet you when I clip off, something's going to happen and I'm just going to hear everything. Dad.
Can you hear me now, Andrew?
Is it crystal? Can everyone hear? Was that okay for everybody?
Good times.
Robbie would have known. Disadvantages of being self-employed. What is that?
Right, we've got to call it a day there, I'm afraid.
Am I taking that one?
Am
I taking that one?
We'll call it a day there.
Self-employed. It's all advantage, mate. It's all advantage. Would you rather pay your tax at the year end or 9 months after the year end, or would you rather pay your tax on a monthly basis, have it ripped away from you? Yeah? That's the question you have to ask yourself. I would work for myself any day than be employed, because you tell the Inland Revenue what you're going to pay them. They can't tell you. You get your income and then you can spend, and then you get your personal allowance, and then what's left is your pay tax on. As opposed to employed, as soon as you get your income, it's taxed. and then what's left you can spend. So, you know, the advantages are there. What's the disadvantage? Well, you have to be your own motivator. You have to be a salesperson. You have to go out and get your business. You have to put your business. You have to grow your business. These are things that a 9-to-5 person can't do, or, you know, because they're stuck at the desk from 9 to 5. As a sole trader, it's you who, your personality, your character will see you through, will get your clients, can charge what you want. There's no ceiling on what you can charge. Yeah, it's up to you to do what you want to do. Yeah, there are no rules. So as a sole trader, no rules. Yeah, you partner with people. Like I partner with Josh. Josh is a great guy, by the way. You partner with somebody. Yeah, anything you want, you got it, JM, you got it, because he's a mover and shaker, and it's like, once, if you put your positive energy into somebody who's got negative energy, it's dispelled, it's just wasted. But if you put a positive energy into somebody who's positive, there's a positive give and take there, yeah, so you find those people. There's people who drain your energy, there's people who take, you know, who take advice and don't do anything with it. Yeah, but there's people who take action, and that's what you'll find when you're self-employed. Yeah, plenty of action takers and plenty of just surround yourself with positive people, and you can actually tell those types of people of what they actually say out of their mouth. Yeah, and the things they do, you'll see them. Right, sir. Thank you very much, Robert. I appreciate that. The website, all those who can't see it, well, they can see that, yeah? It's www.fitness, on the left-hand side, fitnessindustryAccountants.com. Now, I have put a lot in there. You go into resources and there's a lot of stuff for you. There's downloadable spreadsheets, there's business templates, there's company templates. I regularly update it with articles and stuff. So there's online calculators, there's tax rates. If you want to find out the tax rates, go on the resources and you see the tax rate. There's lots there. Now, if there's something, in fact, I'll put a business, if you're doing a business plan, go to news and go to articles, and the business plans are down, I think they're down there, I'll put them there. Yes, there's business plans there. There's everything you need to run your business. If it's not there, please email me, and then I'll put it together. I'll put a spreadsheet together. I'll put a document together, and upload it there so everybody else can use it. So don't feel shy. PT Toolbox is there to help you, to develop you and your business. Yeah, that's what we're here for. And we're doing the accounting taxation side. So I don't know. My background, I'm a PT. I was an ex-PT, group instructor. Yeah, so I've been there. I've been in the fitness industry for 28 years. So I've been through where you've been. I've had my first client. I've worked for leisure centres. I'm now helping you guys to do your stuff. So, Uber, thank you very much. Matthew Oakley from Morden. I'll say Morden because South London in the house. Yeah, the last one. All the people else in the shout box. David, thank you for logging on. Neil from this is UK. Neil Elborn, thank you. Rob been a champion from Blackpool. Lovely. South London. South London, that's them. I'm always listen, although I live here, in between Nottingham and York, I'm always a South Londoner. I'm South London born, South London bred, tooting in the house. Tooting brother, yeah? So South London. So, David, thank you as well, sir. If there's any other questions you want, or you want to ask me, please feel free on an email or whatever have you. So I think it's dinner time now. What are you doing, Rob? What's Rob doing? Dinner time? Yeah, something to eat. It's strange because I can't hear anybody. I can't hear you or whatever, and I just hope that it's nice and clear. I do, you know. It makes, you know what? Thank you very much for taking the time out to come on this webinar. I fully appreciate it, and I appreciate that you asking all those questions. That shows that you want to achieve, you want to know stuff. Now, I've taken 8 years plus to learn all that accounting tax stuff, so that you don't need to do it. You don't need to do it. You just need to ask me. I'll shortcut your learning curve. That's the whole point. And then one day I'll be coming down there, maybe Blackpool, and you know I might want a little session, what PT one-on-one session. I'm sure you would oblige, you know. So I think what's it saying? Okay, listen. Yeah, email tonight. Any questions? That's cool. Right, okay, I think I'm over that then. If I'm going to pass back over to Josh. I could talk for ages if you wanted to, but yeah. Thank you very much for coming, and I appreciate the time. Thank you, Josh.
Thank you very much.
Yeah.
Thank you, Andrew. Have a good evening, and thank you for all your help. Don't forget to tune in next week, guys. We'll be doing everything about SEO and social media marketing. Thank you very much. Good night.